Good afternoon, everyone, and welcome to another Stock Market Today. It's Justin Nielsen here, along with Ed Carson. It's Tuesday, January 9th, 2024, and we're going to walk you through the day's action. Indexes, we're kind of a little back and forth, but retained most of the gains from yesterday, and we've got a couple stocks on tap. What do you got for us today, Ed?
Well, I want to take a look at Palo Alto Networks, Howmet Aerospace, and uranium producer Cameco.
Sounds like a plan. Well, first of all, let's take a look at the indexes. We had the S&P 500 finish about 0.2% down. The composite, Nasdaq composite, was up about 0.1%. The Dow Jones Industrial Average down about 0.4%, and the Russell 2000, the hardest hit, down 1%. So if we go ahead and pull up the Nasdaq composite, it looks like you stopped sharing for a sec there. Ed?
I did, and I don't know why I did that, but here we
Yeah,
are.
okay, well, sometimes that's what happens on a Tuesday. But yeah, the Nasdaq Composite, I mean, we really had a great day yesterday. And I guess the thing that I was looking for today mostly was, can we can we keep it? Or is it one of those one-day wonders, one-hit wonders? What was your take on today's action?
Not a whole lot of the difference. I mean, the Nasdaq looks the best, and there's, the Nasdaq and some other names continue to act well. The market breadth was not great today, but I mean, look, we largely held those gains, and there was some nice action by some leading stocks. You'd like to see more breadth on a day-to-day basis, but you put Monday and Tuesday together, I think it's a pretty good combination, all in all. If you think of it from a weekly perspective, not that we would do that yet, but generally, you got to be pretty happy with this 1-2 punch, and even on some of the other indexes.
Yeah, definitely. And when you say the breadth, what kind of measures are you looking at? I mean, certainly there's the advancers versus decliners. A lot of times we look at the equal weighted ETFs, RSP for the S&P 500 and QQEW for the Nasdaq 100. What was it that was kind of your gauge that you were looking at for breadth today?
Well, if I'm going to look right off during the day, I often just look at RSP, which that was fine, an IWM, which tends to be volatile, which is for the Russell 2000, and that came down. Longer term after the close, a couple hours after the close, we get things like GMIAB, which you can track the advanced decline line. You can find this on other services that's intraday, but I usually just look at RSP, IWM, those kind of things, just intraday, just to get a rough picture, because I'm not trying to be precise and tell you exactly the number.
Yeah,
But I just want to get some idea.
some sense.
Because some sense is the market, is the underlying trend there. And you don't need all the stocks to go up, but it's just not great when it's only a handful of stocks, because that makes you wonder, is that just everybody rushing into the same number and it'll all fall apart? Or will it, is there something really more meaningful, like, and we saw it late 2023 because interest rates are falling. People are thinking there's a soft landing. That was just good for stocks generally, not just a handful.
Yeah. And so turning our attention to kind of different levels, certainly the 14,000 level seems like it's important. We're not in risk of that anymore. Now we're kind of on our way back up to that 15,000 level that, we got up there a few days. What are you kind of looking at in terms of hurdles that the indexes need to get? I mean, certainly the 10-day moving average line, I believe that's your pink line
Yeah, that's
right
my
there.
pink line.
Yeah. So,
I mean, it's the 15,000 level there. And I do think that we held this area, like sort of the
mhm.
top of this consolidation, even more so. And the 10-week line looking there is basically there, and so that all that support, there's a lot of support right underneath last week's lows that you would hope that it could hold. And what's different this time is that when we were getting up here, the NASDAQ was looking a little extended from the 50-day line. Now, if we go straight up, but even over a few days, the 50-day line has made a lot of progress
Mhm.
in just a couple of weeks, as it's really trying to catch up. So that would make you feel less comfortable, but that would be the big hurdle. Obviously, the other indexes have their own things, the S&P and other things, but that's certainly in the card. It's just like holding the 21-day line, and whether it takes it out, gets above these highs, in the next few days or the next few weeks. I think this whole area, the 21-day line in here, is what I'm looking for. Is making sure we have that support held.
Mhm. Well, let's go ahead and turn our attention over the S&P 500. You mentioned that, and the S&P 500 really kind of held that 21-day moving average line a little bit better than the Nasdaq did. 4,800 looks like an area of interest here.
Yeah, I think so. It's just the same thing. It's like they found support, largely held the gains, and now if it could move up, it wouldn't be so extended as like again like the Nasdaq, it would have that opportunity.
And the Dow Jones Industrial Average, that looked very different. I mean, it wasn't really until Boeing started, uh, kind of taking a little bit off of this, but it really didn't have much of a correction at all, much of a pullback. It was really kind of the former leaders, the big tech, all of those that got the major damage that first week to start the year. Anything to note here?
Honestly, I mean, do you even notice that Boeing? And it was like it was intraday, but it
Right?
still
Yeah.
rallied. I mean, I think look, if this were the Dow 29, I mean, if we'd already be at a high. I mean,
Yeah.
it's like that would have already because that was really an impressive gain when you consider the drag Boeing was,
Mhm.
yesterday. So yeah, it looks great.
Yeah. And Russell 2000. The 2000 level has been the area that we've looked at there. So iShares would be for 200. This is the IWM. A little bit rougher here. Down 1%, but still, if you kind of did that combination of the 2 days, you're in the mid range.
You're in the mid range, and it was an inside day, and it closed sort of in the upper area of the range, at least. I mean, maybe more the true range, it was sort of in the middle, but held the 21-day line. But here you can just see the market breadth weakening here in this sense, and you can see how the relative strength line is against weakened again. Yeah, it'd be nice to get. This is probably the weak. This is the weakest part of the market right now. I mean, in terms of those indexes needing to get back above this key area, because this was an area when it got above there, it's like, okay, we're finally clear that level and we've come back in. So getting to that 200 level or the 2000 level on the Russell itself
Mhm.
would be really, really important. I think that would be a sign of breadth in this market.
Yeah, and certainly 2023 was the year of the Russell underperforming. I mean, you could go back even further because
Yeah, this
it's
was
really
this
been
was
a lot of years here.
yeah, it's almost 3 years of underperformance, and this was like this stretch here was like the longest stretch of outperformance
Mhm.
since basically that peak. And it's come off a little bit, so it's not the worst, but would like to see that pick up again.
And of course, the Russell 2000, it's a small cap index. A lot of the small caps are a little bit more interest rate sensitive because they do require a little bit more debt for their growth. So it's probably worth taking a look at the 10-year Treasury yield. Zero TNX is how to find that on MarketSmith. And, I don't know that it's supposed to matter, but the 200-day moving average lines seem to matter in this case.
Yeah, I did. I was a little surprised. It's trading around the 4% level, so this is a key area. I think if the yield holds somewhere around this area, that's fine. I mean, that's sort of like soft landing, not too big of a deal. The market's maybe not have that huge ascent. It's only if the yield just starts surging back towards 5%, which just doesn't seem to be in the cards right now. It
Mhm.
just with inflation coming down, it just doesn't feel like there'd be a scenario for that. But yeah, that's it's just holding steady right now.
Mhm. And one of the areas of strength yesterday was SMH. That's the semiconductor Vanex semiconductor ETF. And it was kind of nice to see that follow up today. Certainly, NVIDIA was a big part of that. But you were mentioning, you were kind of giving me the warning. Taiwan Semi is going to be coming out with some news soon. So that's something to watch.
Yeah, and NVIDIA is clearly the dominant holding. So that's one reason why SMH is doing well. AMD is another big component. That continued to do well. NVIDIA just sort of powered on, is now slightly extended. But yes, TSM, they'll report December sales, and they make chips for Apple and NVIDIA and Qualcomm and a bunch of others. So what they have to say about sales and about if they have any other hints, I think they'll probably just release the sales in a week or in a week plus. They'll be releasing earnings, so that's sort of a 1-2 punch. Of what's going on, but that will be a given. Those will give a measure of the chip industry. Everybody talks about what the chip industry will do. These eight chips will do. Well, this will give you an idea of what's actually happening.
Yeah.
So not doing terribly, but I will say the SMH, because it's so dominated by a few leaders, there's a lot of sectors that haven't been doing as well lately, the auto chips and some other areas. So they were all moving together for a while and not as much now.
Mhm. And then over in software, another area strongly related to tech, another case where strong day yesterday, nice follow up to the action today, and built on the gains of yesterday.
Yeah, there was a lot of nice names that kept on going, moving out, including Palo Alto. A lot of this came down to the 10-week line, and it's rebounding like a lot of stocks did. A lot of stocks did this, so this is where you'd like it to find support, and it has so far. So there was definitely a number of buying opportunities in software today.
hmm Well, you mentioned Palo Alto, so why don't we go ahead and head on over there? Cybersecurity, certainly one of the areas of interest in this rally of 2023, and in the current rally since November 1st follow through day. Palo Alto Networks, I should also mention, if you want more information on it, it was the stock of the day today, so an article well worth reading there. But go ahead and give us your take on this one.
Well, on a daily chart, you can see that after getting up toward the profit taking zone, which is not not that, it's unusual. A lot of stocks did this. Obviously, the market topped out, but a lot of them did that, and now it came back down. It's rebounded from above the 21-day line, broke a trend line. On a weekly chart, that rebound started, basically last week and this week, rebounding from the 10-week line. So a lot of reasons you could say, it's viable. The volume dried up on the pullback to a great extent. Wasn't a ton of volume today and yesterday, but it was better than last week. So that's something. Uh, I think the only real, there's a couple of things. Is one is that the earnings this year, fiscal year, are supposed to fall, and we already had one quarter. So something's not looking good going ahead. I'm not sure what's all driving. And the other one is that this is not the leader in the group right now, but some of the other leaders are extended, like a CrowdStrike. So
hmm
that would be one concern. Is like, do you want to attach yourself to a laggard? This is one reason why you want to build those watch lists so you can jump into the leaders before you sort of wake up blurry-eyed from the alarm, kind of thing, and catch in. But otherwise, I think this is looking very interesting.
Yeah. And something that I used to see Bill O'Neill, the founder of Investors Business Daily, do sometimes is he wasn't quite sure who the leader was, but he had it narrowed down to two or three. He would buy all of them and then let the market tell him. And, he'd just kind of funnel the money from one into the others as the market kind of said, oh, this one's a little bit more powerful. Sometimes it was based on what the earnings looked like, but sometimes that's something that you really kind of went by the chart and the relative strength. So that's another way of playing that. We kind of talked a little bit about the woes of Boeing, and certainly aerospace and defense has had some shakes there, but Howmet Aerospace is in this space, and that seems to be holding up pretty well.
Yeah, and they do some things with Boeing. They make they have titanium alloys that are used in there. There was a little bit of drop initially yesterday, but shook it off. It's holding that 21-day line. It's really staying in this buy zone, really. You could be buying it now. But on a weekly chart, it's been trading very tightly for several weeks. And in fact, after this week, it will have a flat base. So this is that area right there is buyable. It'd be off the 10-week line. So this is showing real strength, and it's nice to have a little bit of diversity from the tech
Mhm.
area, and the growth is strong here. This isn't like, oh, well, I'm not in tech, I'm going to have to settle for some boring, non-growth company. No, this one's doing quite well. So definitely one to be considering. Well, there was this volume here, but it wasn't like the stock really fell that much that week. So it seems like generally there was strong volume on the upside. The fundamentals are strong. So I think there's a lot of reason. The up down volume, I don't even, wow, that's a huge 2.7,
Yeah.
which tells you how the volume has been lately, and then it dried up. So I think there's a lot of things going on.
Yeah. Well, now one thing that does jump out at me is this just strikes me as very tight action. You see a lot of these blue shaded areas, and this is something that MarketSmith does with the pattern recognition. It will shade in blue 3 weeks tight areas, and this one has a lot of them. Sometimes I fear that it's going to be like, oh, this is such a slow mover. It just it's always going tight. So it certainly, I mean, you look at that big move it had as it broke its downtrend and got back above the 40-week moving average line. So it obviously can move, but do you ever get concerned? Like, is it going to be like watching paint dry? Are you going to have the patience for it?
That can be an issue, and it is nice that it's coming up to a moving average again. So that suggests that maybe it'll be ready for another move. Just look at this RS line. This it's had this outperformed the market. Now it hasn't been blistering, but even in the last couple months, it's done all right here. So I think that if it's paint dry, but you're making money while that paint is drying, it's not so bad. I think that, and making more money than if you were doing something else like the S&P 500. You can't get too upset with that kind of environment.
Yeah, and I think that's the key right there is that relative strength line because certainly if there's a lot of tight areas and you don't get that outperformance versus the S&P 500, then it's kind of like, well, why take the single stock risk? But if you are getting paid for it and you don't have too much volatility, well, that's kind of the best of both worlds. You don't have to reach for the tums at night, but at the same time you can kind of cash in. Another area, just speaking of diversity. If you look at the uranium plays, particularly CCJ, Cameco, which is a big player in the uranium space, this had a really big move today. Up almost 5%, getting back above that 50-day moving average line after having just a few days below it. So, was that a sell signal? Getting below the 50-day moving average line, or was that something that could have been given a little bit more room?
I don't know. I don't think so. I feel like it was probably one you probably should have sold, to be honest. It closed 3.7% below the 10-week line. It's sort of like we generally have a rule of thumb of like if it's 2% below. I mean, look, if you wanted to hold it, could you say like if you had bought it and it was holding the top of the base, you could have. But I personally, that was sort of like a sell signal. Then I would have been frustrated because I would have watched the stock go
Mhm.
back up. So I mean, there's not a signal. I mean, there's not a rule on something like that that's going to work every time. I mean, you just try to find something that works generally for you. I understand if somebody would have held that, but today it's gotten back above the 10-week line, back above the 50-day line, breaking a short trend line. I will say that this is probably a place to be entering it rather than the buy point, because if you look at some of these other areas, it often struggles around the buy point. This one actually did well, but you see it gets up towards the high, then it struggles, gets up towards the high, struggles. Even here, there are a number of times if you buy it on the official buy point, it's hard to hold, or you just simply have to get out.
Mhm.
So it would seem like you'd at least want to start a position around the 50-day line, 10-week line, because it has trended up. I mean, it's not like this has been a laggard. It's just been uh, sort of chopping around as it does that. So it makes it hard to buy it on strength.
Yeah, and I will disclose that I do have a position in this myself, and I actually did hold it. One of the reasons was because I was kind of waiting until the end of the week. By the end of the week, last week, yes, it was down 3.7% below the 10-week moving average line, but it closed in the upper part of the range for the week.
Hmm.
So it was kind of like, okay, well, I might be able to give it a little bit more room, and that was because I did have a cushion on it. So that does
Okay.
kind of change things when you have a little bit of a cushion. You can give something more room. I will say I wasn't, it wasn't fun, being up at, over, 46, 47 and having it come in all that way. But again, when you have a lower average cost, it's a little bit easier to sit with something like that.
Yeah,
Uh,
and there's also the URNM is another
yes.
option. And Cameco has a lot in, is a big component in that, I believe. So that was also actionable, moving up toward the top of the base. And this isn't too extended, even if it does break out past here,
Mhm.
past the 50, 55
Yeah,
as well.
and this did get added to Swing Trader, by the way, today. The Sprott Uranium ETF. So, well, that's going to wrap it up for us today. For those of you that are leaderboard subscribers, if you want to join me in 2 minutes, we're going to have a leaderboard scorecard. So, yeah, we better get going for that. Thanks a lot for joining us today. And if you haven't already, always feel free to join us in the mornings, 10 minutes before the market open. We start talking on investors.com/IBD Live. We do this every market day, and we go for a full hour plus into the market action and analyze what's going on. So, please join us for that, and also make sure you join us tomorrow for another Stock Market Today episode. That's going to wrap it up for us today. Thanks for watching.